not now.
Yeah. So welcome everyone. Thanks for tuning in. Thanks for joining us this afternoon or this morning or this evening, wherever you happen to be joining us from. Great to have you tuning in to our discussion today. We have two great guests that are joining us to talk precious metals, among other things in the sector. Maybe I'll start off by introducing Karl Boyd. He's joining us from his car live. Hopefully he doesn't get in an accident while he's out. Karl, president, of course, of Follow the Money. How you doing today, Karl?
Very well, very well. It's a nice clear day here in Southern Ontario.
It looks a lot warmer. It looks a lot warmer than it is in Saskatchewan. And wanted to introduce one of our guests. I think it's our fourth or fifth time having her on, Gwen Preston. Gwen has joined us a few times for some morning drives. We had her on recently at our VID conference. Gwen is a seasoned, experienced person in the commodity space. She has a lot of knowledge, experience in resources commodities. She's a former senior writer with the Northern Miner, and most people will know her from her Resource Maven newsletter. Gwen, thanks for joining us from Vancouver, I believe, today. How are you?
I'm doing well. Thanks so much for having me.
Yeah, it's great to have you back. And also joining us today from Montreal, a first time on our show, Peter Krauth. Peter is a former portfolio advisor. He's a 20-year veteran of the resource market with special expertise in precious metals, mining, and energy stocks. Peter's been the editor of a widely circulated resource newsletter and has contributed numerous articles to Kitco.com, Investing.com, Talk Markets, BNN, Bloomberg, and the Financial Post. So, Peter, great to have you as well today. Welcome to the show. How are you?
I'm great. Thanks for having me, John.
Okay. So why don't we start the discussion out? I think Karl's going to take away most of the questions, but why don't I get things going? One of the big things that I know both you and Gwen wanted to talk about today, the two of you are going to be collaborating on a new silver newsletter. So why don't I have Gwen or Peter, whoever wants to start off, tell us about this collaboration, how you decided that it was time to do this, and what can people expect from it?
Well, I'll let Gwen do the intro.
Sure. So, I've written a series of newsletters now. I launched my newsletter business 6 years ago, and I love what I do. I love the metals and mining space. I love communicating with people, and I love being able to share sort of my knowledge and my network with subscribers. And my subscribers are retail investors who see opportunity in the space, but are aware that it takes a lot of time and a lot of knowledge to really understand the space and tag into the best opportunities. So I love to be able to help them with exactly that need. Of course, doing all of that, I see opportunity for other needs to be met. And one of the ones that I'd noted for quite some time is that there isn't a newsletter out there, a subscriber supported, so an independent newsletter focused on opportunities in the silver sector. And so I'd been thinking about that for some time, but I just did not have the bandwidth to launch another newsletter. And then Peter reached out to me quite a few months ago and was interested in setting up his own newsletter. So he was just reaching out for some conversation around that. And it fairly quickly became clear that we share a lot of perspectives on how newsletters should operate, primarily that you don't take money from companies, that it's all subscriber supported, on sort of where the markets are going, on what the main drivers are. And so in not too long, I asked Peter if instead of going out on his own, would he like to join forces and launch a silver newsletter under as part of the Resource Maven family. And so here we are. We're nearing the first issue of that, hitting the waves on January 1st. And yeah, we're both very excited.
Well, that's great news. So January 1st, is there a link that anyone can go to? Is it Silver Investor, or what link?
The website will be silverstockinvestor.com. It is not quite up yet. We are racing to get that ready. But right now, if you go to resourcemaven.ca, so that's the homepage for everything. That's my homepage. Very clear link there, a big blue banner that says Silver Stock Investor. You can click there. You can get his free silver report that's already available, and you can certainly sign up so that you are on the list to make sure that you get those for that first issue.
Okay, so I think this is a great time to bring up silver, obviously, while we're talking about it. So let's start with you, Gwen. thoughts on silver as a whole. Obviously, that we had a big run earlier in the year, a major breakout move, actually incredible strength behind that move, and obviously along with gold, silver has sort of consolidated. You know, it's kind of seems to be deciding what it wants to do. What are your thoughts going forward on silver, and you know, should investors be paying attention to it?
Sure, I'll just give a brief overview because Peter's got more of the details at the tips of his fingers. But I think that the gold market that we've had to date, I mean, starting back in 2016, the precious metals market that we've had to date has been a fear-driven, recession-fearing market primarily. And that, you know, there was fuel poured on that fire when COVID hit and slammed interest rates to zero, because that really solidified the negative real rate aspect of a fear-driven precious metals market. And so that has really worked so far. But the move that we saw in gold and silver in the summer was the beginning of the next phase. And that, instead of being a fear-driven move, was an inflation-driven move. And so inflation expectations were really rising. And because of that, since we're in a zero interest rate environment, that only means more and more negative real rates going forward. That's the new main reason to invest in precious metals. And so I really think that that is going to play a significant role in 2021. We're talking about, you know, vaccines and COVID hopefully becoming under control, and all of the negative impacts that we've had from this pandemic starting to ease. And so the opportunity for a real recovery, but still in the context of massive government support, zero interest rate environment. So governments and central banks that are doing their very utmost to encourage inflation, and that produces inflation in a zero interest rate environment, produces a precious metals bull market. And then you have the industrial side of the equation on top of that for silver. I might let Peter take it over from here because he knows that side of things. Whatever, like I say, he's got that information a bit more at his fingertips, but I'm very bullish on silver for 2021.
Okay. Peter, what do you have to say?
Yeah, well, I'll expand a little bit on what Gwen said. So, you know, when it comes to the industrial side, a much, you know, a larger portion of the gold consumption market, of the silver consumption market goes to industry. So if you've got, you know, gold where it's somewhere like 7, I think to 10% goes to industry, in silver it's closer to like 60 or 70%. So some of the very particular drivers for silver, the fact that it's, by different measures, it varies, but it's somewhere like maybe a tenth the size of the gold market. So it moves with a lot less buying. It's understandably, therefore, you know, a more volatile market. And it's also inelastic. So something like 70%, sorry, of the silver production is a byproduct of other metals. So even if the silver price rises, producers will not just open the tap and start producing more silver. They can't. It's an afterthought for them. The revenue significance for them is actually quite low. So as demand rises and therefore the price rises for silver, they can't and won't keep up. And that kind of feeds on itself, helping to push the price even higher. On top of that, you've got, as I said earlier, you know, industrial demand, like Gwen said, inflation from lots of stimulus and printing, and that's leading to obviously demand on the industrial side. But silver is important for green energy, things like EVs, electric vehicles, and for the solar market. And so that aspect of things certainly is growing. Demand is pushing quickly higher there as well. And the final point is that historically we've seen it. It's always been the case. Silver outperforms gold in a bull market. So, you know, if you combine these 5, 6 different sort of major drivers of silver, you get all the right ingredients for really quite a massive bull market ahead of us.
Peter, what do you think about the futures market? You know, an SLV and a lot of the what seems to be manipulation that happens to the price of silver. Where do you see that continuing on in 2021, or do you think that there could be a short squeeze?
Yeah, you know, that is so nebulous. I've got to say that I've looked at that many times, And I don't, honestly, I don't know. I don't know if we can say it's manipulated. I've heard and read the opinions of many people who are extremely plugged in and educated in this aspect of it. Some of them do not believe it's manipulated. I'm talking about, very wise people in resources who've been in the space for 30, 40, 50 years. And then I hear from others who, with a similar, timeline of background, who believe the opposite, that yes, it's totally manipulated. What I can say is, maybe we're somewhere a little bit in between. We've seen, news reports come out about some of these larger investment banks that have had their knuckles wrapped for doing things like spoofing. That's a fact. They've paid big fines for it. I mean, again, I kind of come back to, I really don't know where that stands. I'm not sure we'll ever really know, but I think that none of that's going to take away from the potential silver has. If anything, if it's real, if there's some aspect to it that's real, then I think that it's only going to help. So to your point, Karl, that there may be something there that will be supportive. And even if it's only a minor factor, I think just sort of, that's a little bit of one of those, what you call, I guess, self-fulfilling prophecies. If people believe it's there and start to see silver move, believe there's a squeeze going on, and start to jump in, that's just going to exacerbate it and push it higher. So, I mean, as much of a non-answer as that might be, that's how I really honestly see it.
Okay, and so this newsletter that you two are bringing out, is it going to be more focused on the producers, on the exploration stocks, or development plays?
So yes, yes to everything, and that's I think kind of what makes it unique, and where there's really, from what we know, no competition in this space. The first thing that we want to do, and Gwen and I certainly see eye to eye on this, is to make it understandable, readable, accessible to anyone who's from a novice investor to someone who has more experience and is more sophisticated. And when it comes to what we're covering, I'm going to say, except for maybe something like futures, the whole gamut, everything from talking about dealers, coin and bar dealers, that if people want to buy physical, to bullion backed ETFs, and then from there, the larger silver royalty companies, the larger producers, the medium and smaller producers, and then all the way to junior explorers, some with existing resources, some perhaps without. So we cover the whole gamut of silver investments, as well as the tag along sort of risk profile that goes with that.
Okay. What would be your thoughts on, say, a Discovery Metals?
Yeah, I mean, that I've got to say, first off, that's not one that I directly follow. Gwen, I don't know if that's someone that you're more familiar with.
I mean, the main Discovery Metals, I don't own it myself, but it's a classic example of an optionality play, right? And if you're interested in, if you want to get exposure to a market, gold, silver, copper, whatever it is, there's various avenues that you can use for that. You can play the large producers, you can do the growing, single asset operators, you can do the developers. One of the categories is certainly optionality plays. And so the definition of that is a company that has a very large asset base, so a lot of ounces in the ground. And the reason that optionality plays can work so well is that big resources are specifically hated in bad markets because they're very expensive to develop, to advance down the pipeline towards production. They're very difficult. They're specifically hated when markets are bad. Then when markets get really good, big producers need big assets to stay big in the future. So they go from being specifically hated to being the belle of the ball. And it happens very quickly. Sort of all of a sudden we get to a point where the big producers are like, oh my goodness, I have a bunch of money and I need to buy some big new assets so that my pipeline stays full. And all of a sudden, a bunch of big producers start focusing on the few large assets that remained viable, that kept advancing, kept permitting, kept exploring, kept mine planning, and all of that through the weaker markets. And so Discovery Metals is definitely in that category. It's a big asset. It's not a high grade, so it doesn't attract the kind of excitement early in a precious metals market that some of the splashier, like a silver crest, might attract for its splashy grades. But because it's big, it fits right into that optionality category. That's the way I see it, at least.
This might not be the best question, but I was just thinking about it, like, because silver is a byproduct, and getting into your point about Discovery Metals and how, you know, that might be a play for a larger producer at some point when they're sitting on tons of cash. How would they play that, because it's a byproduct versus a gold producing company trying to, you know, bump its inventory of gold? Is it different, or is it just the same?
I mean, how does the producer sort of, or how does Discovery Metals play that angle, you mean?
No, the producer. Would they just play that the same way as if they were trying to, you know, top up their inventory of gold, of ounces in the ground?
Well,
Because
I think
if
that's
it's
one of those weird things where the silver market is just small. And so what large silver producers are there? Hardly any. There's Pan
Right.
American, there's a very small cadre of silver focused producers. And so they remain silver focused producers because it's an exclusive club. And when the silver market goes, there's hardly any options, there's hardly any stocks to buy in that club. And so they know that when the market gets hot, man, do they get a lot of buying. Like, that's why uranium markets are also so exciting.
Right.
Like, there's hardly
I was thinking about uranium.
buy.
Yeah.
And so those who have, the companies that have decided to be in that club will stick to that club. And so then it's almost like an exclusive part of the optionality play, in which there are hardly any players anyway. So it's like an exclusive level of the exclusive type thing.
Okay. And Peter, sort of, what's your thoughts on the bullion market versus, you know, stocks when it comes to silver?
Well, I mean, if your question is, you know, does it have a role in people's portfolios? Is that kind of the angle you're looking at?
Yeah, you know, a lot of people talk about it, you know, their allocation. Well, they'll keep 10% of their, you know, of their portfolio into, say, silver bullion, and then they might play some silver futures or some, you know, exploration stocks. Do you have, you know, what's your strategy with that? What are you more of a believer in?
I believe that, you know, both gold and silver, at least even some small allocations to both of those, some physical, absolutely, it makes sense. Silver I like for, well, multiple reasons. One is that, you know, it's certainly more accessible price-wise, it's cheaper. However, you know, if you want to store a little bit, it does take a lot more room for the same gold value. But the fact that it's cheap, and you know that if you have coins or even small bars, coins especially, you know, a lot of people look forward and say, if we get to a point where there's some sort of monetary reset, and let's hope we don't get there in this fashion, but if you need some way to pay for things other than cash, you could always use silver coins, especially if they're from a recognized mint, a national mint. So yeah, I think that that for some people in the past, I've read about some interesting stories, some very again very respectable people who've actually had to draw on their physical silver to get them out of a bind, and it did the job for them. So yes, absolutely, at least a small allocation to physical for sure.
When it comes to the geology, is there any particular place in the world that you like or you don't like when it comes to finding silver?
Yeah, so what I do like is, I guess, a lot of maybe some of the more obvious places. You know, the first will be, say, Mexico. From there, parts of Argentina. You've got actually parts of Chile as well. Other than that, Nevada certainly is a great place for silver. That's probably, you know, very much near the top of the list. And then some places that I don't like so much are at the top of that list would probably be Bolivia. There are some fantastic projects. The problem is, you know, can you actually get that out of the ground, and can you actually do it profitably? Is it reliable to operate there? Besides that, in terms of jurisdictions that are not so great, I mean, that's really what comes to mind. There are others, but silver is very localized in terms of where you can find and produce. That's, yeah, that I'm going to say is probably the best overview.
Okay. John, do you have any questions?
I was going to ask Gwen if she agrees with Peter there on some of those jurisdictions.
For sure, his list of jurisdictions to watch, I think, because it was a very good list, and this all goes back to that comment about how 70% of silver is made as a byproduct, and so sure, there's a lot of silver that comes from other jurisdictions because it's coming as a byproduct from a VMS deposit or a skarn deposit or even porphyry deposits that can be silver rich, whatever it might be. If you want to specifically look for silver exposure in your portfolio, you're not looking for it as a byproduct. You're not looking for it as a secondary or tertiary component in a deposit. You're looking for it as the thing. And so the jurisdictions that he mentioned are the prime places where silver is the main metal in the deposit that you're looking for. And those have been the jurisdictions that have served up those exciting kind of discoveries that have driven the market in the last decade or more. As for places to avoid, I mean, it's such an interesting question. I get this question about jurisdictional risk all the time, and it doesn't, the risky places are risky, doesn't matter what commodity you're interested in, right? It's a matter of, can you have security of owning your project? Can you operate there? Are you actually allowed to drill? Can you get a drill permit in some reasonable period of time? And if you make a discovery, are you going to be able to keep it? Or is the government going to either directly nationalize it or change the rules of the game so much that it's not economic to do anything with it? And so, and those risks, I like to point out, are present in Nevada and in Bolivia, right? Like I was just writing last night about how difficult it is to get a drill permit on Forest Service land in Nevada, right? So jurisdictional risk is this huge arena. And so you have to be a little bit, it's hard to talk about it in one answer. You have to be a little bit more specific what you're describing. But anyways, yes, Peter's description of the places to specifically look for silver, I think is absolutely right. Places to avoid looking for metals in general is a very big question.
Okay.
I had sorry, Karl, I had a question that I wanted to put up, and maybe Gwen, you could start us off. I was curious on your thoughts. When does silver make its next big move? Is it going to run in tandem with gold or separate? And what is going to be the catalyst behind that? What do you think? What do you think pops the silver market in its next move?
I think that gold has done the heavy lifting that it usually has to do to get a precious metals market going. And this goes back to, I think, my first answer in this conversation, which is how the first part of the precious metals market was about a fear trade, but now we've moved into a growth and inflation trade instead. And that that trajectory or that pattern in a precious metals market does a lot to explain why silver often performs later than gold in a market, which is that silver, while it is certainly an investment, it is a diversification, against fiat currency risk and recession risk and whatnot. Gold is certainly steps forward first in those situations, and so it gets bought first. Once you get to the side of the market where the concerns are more about inflation in a growth environment, well, then silver just makes tons of sense because it offers both sides. It offers that currency protection, that inflation hedge. It has that investment role that it's always had, but just as much, it is an industrial commodity where demand is going to go up because of all of the green energy, because it's an industrial commodity. And so it really plays both sides of the coin that is driving this second half of the market. So in that context, I actually just think that Q1 is going to work really well for precious metals. And I think that because if the thing that I'm looking for is inflation expectations to start rising again, I think that that happens as soon as we get another major stimulus bill in the United States. Is that going to happen before the end of the year? Maybe the Trump administration has this $900 billion thing that has Mitch McConnell's endorsement, but the Democrats aren't on board yet. So it's possible, but not likely that it's going to happen before the end of the year. once Biden gets into office, I think that this will happen. I mean, it doesn't matter Republican, Democrat. Stimulus was always going to happen. It's just quibbling over the details in a partisan manner right now. So once we get an inauguration and we have a new president, a new administration in, which is certainly what it looks like. I know there's people who don't believe that the outcome is certain, but that's what it looks like right now. I think we will get a stimulus bill. It was the stimulus that happened in April and May that drove inflation expectations through the roof, that drove gold and silver in the middle of last year. I really think that we are going to have a replay of that in Q1, but on a more solid footing, which is that now we have vaccines and we can sort of see a light at the end of the COVID tunnel. So I really think that we're set up for that second phase of the precious metals market strongly starting in Q1, and that silver should perform right alongside gold in terms of timing, but then we'll probably outperform it in terms of its move, because that's what silver does.
So you would expect the gold to silver ratio to fall as both gold and silver are appreciating in value.
That's what I think.
Okay. And is the
I just took a really long time to say it.
Is the move going to be more violent than it was earlier this year, or is it going to be more gradual?
I would certainly, actually, I expect it to be more gradual, because this is a more, I don't know if reasoned is the right word, but this is a move that's based in an expectation that the economy is recovering. Whatever you think that looks like. I mean, if we had economic recovery, if that's what we called it back in 2016, then, plow horse recovery, or however you might characterize it. But this is a move that's based in an expectation of recovery. It's based in inflation expectations rising. So I think that we're through the worst of the joltiness of what COVID caused. So I think it will be a bit more sustained. And that's actually preferable for those of us who are invested in the market, right? Because we want it to last longer, and sharp moves don't last as long as more sustained moves usually. Yeah. So that's what I see.
Peter, your thoughts on that? When's the next big move? Is it going to be more violent, less violent, and what's the big catalyst? Are you in agreement with Gwen, or do you?
Yeah, I think Q1 is definitely where we're going to start to see this thing to kick in, and silver is going to really gain some traction once again. I find it interesting, if you look back a little bit, that's something that people like us tend to do to get an idea of what things may look like in the future. And if you look at the last time silver really did extremely well, we're talking about April of 2011. And gold actually peaked in August or September 2011. So silver came in with its peak, several months earlier, 4 or 5 months earlier, and it was also a lot more dramatic. I think we're going to see silver start to outperform as well, and but I would agree that we're going to get to that kind of level, at least initially, more gradually, and then that, like you said earlier, the ratio will start to come down, silver will start to catch up, and it'll probably overshoot as well. The average for the ratio going back maybe 5, 10, 15 years is on the order of about 50-ish, 45 to 55, let's say. But I think we're going to see that overshoot silver versus gold is going to come down somewhere to about maybe 30-ish. And that's where we're going to see that phase kick in, and silver will really, show what it can do.
So that's significant outperformance, because I believe we're sitting at around 75 today, gold to silver, and so you're thinking that ratio can almost approximately drop in half.
Oh, absolutely, absolutely, okay. And I think that, and that's just sort of in these next few early innings of this whole bull market. I think that when we get to the ultimate peak, and I don't know when that is, we could be 3 years, 5 years, maybe a little bit more. I think we're going to see the ratio actually drop even lower eventually to probably somewhere around 15, maybe even 20. That's where it has bottomed in the past. Mm-hmm. And I see, honestly, I see triple digit silver because of that.
Well, we certainly had the opposite of that early in the year. Sorry, Karl, I was just going to, one last point though. I think we got 115 or something like a, that's
I think even above that, 120 or even 125 maybe for a day. But yeah, it was crazy, and that's, I think, the highest we've ever seen it since, you know, it's been sort of recorded maybe the last 100 years or so.
So.
If ever there was a signal, that was it. And I mean, you know, I remember, it's funny, you know, we haven't really talked that much. Well, we have a little bit talked a little bit about macro, but I just kind of, you know, think back to mid-March, and, you know, these two dates stick in my mind. There was March 19th when the US government, federal government, said we're going to start sending out these $1,200 checks. And, you know, all the stuff that I've been researching and reading and thinking about for the past, you know, 10, 15 years about how eventually we're going to see helicopter money. And I thought, wow, there's your helicopter money.
Here we are. We have arrived.
Here we are. Exactly. And then just 4 days later, you know, the Fed came out and said they were pledging to do asset purchases with no limit. And now they're buying corporate bonds, which is apparently, you know, questionably on the legal side of things. And then that was kind of like the aha moment. I said, this is it. You know, this is like the beginning of this, you know, new phase where we work our way towards eventual reset, where the printing just becomes, you know, it totally explodes. You know, if you look at the Fed's balance sheet, while Yellen was there, and Yellen, who's now going to be head of Treasury in the space of, I think, a year, in the first year she was there, was up $500 billion. It used to be that sounded like big money. Today we're talking trillions and multiple trillions, and people don't even react. It's just expected.
Yeah.
The Fed's balance sheet is at 7 trillion when it was just, you know, end of last year at 4 trillion.
Yeah.
I mean, this train is, you know, has lost its brakes. It's just barreling down the track. There's no stopping it.
Jay Powell has really moved the bar to a whole new level.
Exactly. I think that he and Yellen are going to probably, you know, take vows soon to get married. And I mean, she's probably dusting off her helicopter pilot's license as we speak. You know, there's more coming.
I was going to ask both of you what your best performing individual stock was of 2020 and where you think it could go from here in 2021.
That's a good question. I haven't actually done my portfolio review for 2020 yet. So one that probably is in the running, I'll go through different, I think, because I don't know the specific answer. Pure Gold is definitely a contender. Pure Gold had an incredible year. There's a lot of, it's an interesting one to value right at this moment because they're on the precipice of production. And while you should certainly get a re-rate going from spending money to making money, that's basic business principles there. There is also certainly risk when you enter production. You know, things could derail in one small way or one large way or whatever it might be. That said, I think that the team there, the history of production, and the number of stopes and high grades that they have right available really buffers that risk. So anyways, people must agree because this Pure Gold has run up dramatically as it leads up to production. So that's certainly a possibility. And then on the exploration side, there's been some silver explorers that have done very well. So Vizsla has done very well, and Outcrop has done very well. And those are both high-grade silver explorers. So one of them in Mexico and one of them in Colombia.
Peter?
Yeah, for me, it's going to have to be easily LE Gold, which is a growing royalty company. And we talked, you know, I talked before about March 19th, March 23rd. I remember those days quite clearly because I had butterflies in my stomach and I was thinking, you know, if I'm feeling like this and I'm really, you know, for me, if this is the aha moment, it's like, I'm crazy if I'm not starting to buy some of these smaller, you know, gold and silver stocks. So I actually started buying some. I owned some, but I started buying more LE Gold at the time. I think I paid around 35, 40 cents. and I still own it. Haven't sold any, but you know, it went from that price in March to about, I think, a little over $2 in August. So yeah, that was easily, you know, my best stock this year.
Yeah, we actually do media content with Illegal, so we know them very well. We're big fans of them. So we'll host their webinars and such. Any questions from you, John?
I wanted to know I know going into this year, so say starting 2020, everyone had their expectations, and then obviously the whole, you know, the virus thing hit, and that's, you know, thrown everything out the window. But if you were to sort of, you know, reverse a bit, maybe to like June, July, you know, once we kind of knew what was going on, we went through the first bout of things, and I wanted to know, was there a particular commodity this year that really surprised you? So I want to factor out that whole initial, what we went through in the spring and out of it. But once you got through that, was there a commodity that has really surprised you this year? And in what way? Maybe I'll start with you, Gwen.
So, I mean, it's hard to take the whole year in perspective because the year has been, like you say, so crazy that if I try to look back and say what I think copper should have done, anyways, the commodity that surprised me is copper. Copper is kicking butt right now. Yeah. And copper is one of those, I don't know if you want to call it the boy who cried wolf metals, but like copper is a very large market that is always very tight. So like it's, you know, whatever, 18 million tons a year, and there's like a few 100,000 tons supply or surplus or deficit. So like it's always a very tight market. So that means that it's prone to disruption. So that's why a lot of years you'll hear about, you know, a mine that goes on strike in Chile and the copper price responds. That's because it has to. That mine is essential to feeding this massive, very important market. So it's always a tight market. So it is prone to movements. But you know, look at the beginning of the year, at the beginning of last year, I think a lot of us were looking at the copper outlooks and we were saying, okay, you know, this market's got to go at some point, but you just never know with copper when that point is going to come, because one time that, you know, strike in Chile can have just a blip of an effect, and other times it's the thing that kicks off the next copper market. And it's very difficult to know which one's going to happen when. But apparently, COVID recovery has been the thing that's kicked off or expectation of COVID recovery, or restocking after companies were not buying copper in the COVID chaos. I'm not sure which of those is the main driver right now, but copper is really rising. And it's one of those ones where I think it could still go for quite a while because this fundamental setup has been developing for quite a while, and now it's just finally happening. So copper woke up and it's gonna roar, I think.
Yeah. My last question would be to Peter. Outside of silver, and I'm going to take away gold from you as well. What would be your favorite sector to follow outside of those two?
Well, you know, if you consider base metals as a sector, does that qualify? Karl,
Yeah.
what do you think?
Yeah,
in that case, I'm going to say base metals. You know, Gwen mentioned, she touched on copper. I think that nickel has quite a bright future in the next sort of year or two. Uranium is going to be sort of my surprise this year. I thought it would have done better so far, but I think that's just a question of time. So yeah, uranium, nickel, zinc has actually bounced back quite nicely from about a year ago. And, you know, really that's the space to watch, really, because, you know, all the stimulus is going to push economic recovery. You know, the better feelings around the vaccines and all of, you know, COVID, even if we're not there, it's going to be a tough winter. I think people are kind of not realizing that yet. But, you know, the market's a forward-looking thing. And so, like Gwen said earlier, when we get the next sort of big stimulus package, I think that the market's going to be looking through some of the difficulties that remain with COVID for the next easily 2, maybe 3 months. And yeah, I mean, the base metals are going to start to move as well. There's no question. Uranium is certainly one to watch. That's if silver can go through crazy, mania phases, uranium certainly is part of that. Gwen's familiar with that as well, and that's definitely one to keep a close eye on.
Well, you've given us a few hot takes to take away from that.
Yeah. Uranium, sure. I feel like that's another boy who cried wolf. Sometimes there's been a few false starts, and everyone just gets, oh, this is it, it's finally happening, and then it just completely, fades. We've already seen that earlier this year. So on that note, I'd like your take, Peter. What do you think? Is this, this move that we've seen in uranium lately, even the big stocks like Cameco gapping up with volume, all the stock, I believe I looked at my uranium portfolio today, everything was up again, either mid-single digits, some of them double digits again. Is this finally the start of the move, or you think this is going to be another false start? What do you think?
If only I really knew, John. I mean, I think that it could easily be the start of a sustained move. Are we going to get, how close are we to some kind of a parabolic move? That's a bigger question. I think that kind of action is still a ways off, maybe a year and a half, maybe even 2 years. But can we see it start to gradually climb before that? Again, for a lot of the same reasons as the base metals. My answer is yes. I think we can certainly see a sustained move. And, from what I've seen, the price of uranium itself really hasn't done all that much. No. If the stocks are moving, that's certainly a sign that, they're sensing with what's going on in the market that certainly could be coming for the underlying commodity.
Yeah, I mean, I see this as I feel like there's got to be institutional money flooding in to be able to be pushing prices like this. And I believe that, when everything ran earlier in the year, it was kind of, I feel like, driven by spot price, Cigar Lake going down and some of the, the Kazakh announcements, and we don't have that right now. Maybe that comes again, but, everything is running sort of in advance. Gwen, what's your take on uranium? Do you think this is the, finally the move, or do you think maybe this one fades as well? As I know it's a tough
it's a very tough one. I think I have stopped trying to predict at all when uranium is going to make its parabolic move. It will do one, and it will do one, in this cycle, in this commodity cycle. It's very tough to know when. I read Cameco's quarterlies, not because I care about the numbers. I care about the comments that Gitzel makes about contracting, because what we need is for utilities to start signing new long-term contracts. And each quarter, Gitzel, the president of Cameco, makes a slightly stronger comment about how many utilities are coming to ask for long-term contracts. And when that really starts happening, that's when uranium is going to go. Because utilities are suddenly, when one of them starts doing it, then the next one's like, and then they all freak out that they're going to get cut out of the contracting world, because guess what? There isn't actually enough long-term uranium to cover all of their needs. Mm-hmm. That's what's going to make it happen. And so we're starting to really see that. So it's impossible to know when it's going to happen. I think that we are in that building phase. How long this building phase will last, I don't know. When it happens, it will happen quickly. But just stepping back a bit, comments that we're making now about, silver's going to work and gold. And guess what? Base metals are going to work as well, because we're in a recovery scenario, and uranium is also part of that. That's not just us throwing paint at the wall. That is the nature of a commodities market. And commodities markets are driven by growth, inflation, and a weaker dollar. I see all of those ahead. So this isn't just us, saying everything's going to work. Yay, mining. There's like a fundamental rationale to all of this, which is that we're in an inflationary environment. There's strong reason to believe that the US dollar is heading down in the near term. That is almost always part of a commodities market. And, we have growth ahead. And so that's why these things should all work. They all play together.
Mm-hmm.
There's fundamental reasons for it to happen.
I think 2020s will be the decade of commodities. I think it's just set up for a roar. So both of you, Peter, Gwen, you're both positioned with some uranium exposure. I take it.
Absolutely.
I suspect you've probably been positioned for a while and just kind of
That's
patiently.
right. I think Gwen will agree with me on this, that this is one of those where you basically have to have a horse in the race, a horse that will stay alive, and sit and wait till the starter's pistol, fires. That's basically the approach you need to take.
Yeah.
What kind of advice would you give? And maybe advice isn't the word, but what would you say to somebody that maybe been on the sidelines? They've been, for whatever reason, afraid of the market, the volatility. They think the markets are kind of overpriced, and they look at the markets more of a whole. Like when they think of the market, they think of maybe the S&P 500 and stuff, at new record highs. They've, haven't invested so much in the resource space, whether that's precious metals, whether that's base metals, whether that's uranium. When they've seen some of these runs, like for example, like we've seen in uranium, like we've seen like copper prices have pushed, and that's pushed the copper stocks. The precious metal stocks had a nice run earlier. They've consolidated, but they're still way up from where they used to be. What do you say to somebody that might be nervous about jumping in right now, to maybe put them at ease that, the resource sector, commodities, whether it's base metals, whether it's precious metals, whether it's uranium, it should be something that they are looking at to get exposure to make sure that they can outperform the market? What advice would you give them, or thoughts? Maybe is the better word.
I'll start. I think the points that we just were referencing before this question are the things to focus on, which is that every investment that you make has to have a macroeconomic foundation, right? And so what is that for commodities right now? It is that we're going into a recovery and growth phase. It is that recovery and growth could be it could come from actual growth. The recovery and growth create inflation. That inflation right now could come from real growth, or it could come from stimulus. It could come from both, but growth and inflation are almost baked in the cake right now. And what do growth and inflation support? Well, they support a variety of sectors, but they definitely support commodities. They lead to a weaker dollar, and that is always bullish for commodities, especially when there's demand upswing. And, if you look at the supply demand curves for almost all of these metals, they don't, there's gaps ahead, and that's because there's been such long-term weakness in this market. And then there's also just this really cool thing where gold is well priced right now. Copper miners can make a bunch of money. Silver miners can make money right now. And so then you also have these large players in the mining sector broadly are really profitable right now, and they're paying dividends, and they've got net cash positions. And that is actually anomalous. If you look, you mentioned someone who looked at the S&P as a whole. Most companies in the S&P are buried in debt. And as it turns out, gold miners, silver miners, copper miners have a bunch of cash on hand. So there's a whole host of reasons why the companies make sense, the metals make sense, the macroeconomic makes sense. And if you're nervous about it, well, don't jump in with both feet, but put in a bit of money, because, see how it goes. And then if it does work, you won't miss out.
Yeah. So obviously, to someone to express that maybe like succinctly, you think that there is, even though and that's not a criticism, by the way. I'm just trying to say, like, if you could put it really quickly to talk to somebody and say, yes, everything has had a run already, but there is like a lot of upside left. Like, even though you're getting in now, your upside potential is quite large.
Absolutely. Yeah.
Sorry, and I didn't want my comment to come across the wrong way.
No, I'm just laughing because I'm always long-winded, and so I'm laughing at myself.
Yeah. Peter, anything to add to this? Any thoughts you would share with folks that maybe are newer to the resource space? I think when you see the runs like we get in uranium, maybe people that have no knowledge of uranium start to pay attention. So you do get these newer investors that might know a lot. What would you say to them when they might look at a stock chart and say, "Oh, it's too late," too late.
Yeah,
I missed the move.
exactly. Like Gwen said, I mean, in the general markets, the S&P, chances are you have missed most of the move. I think it can run for a while longer, maybe a year, maybe 18 months. I don't know. But if you're looking for value and therefore minimizing your risk, this is definitely a sector to pay attention to. This is a sector that has been ignored for a long time. And that's why, like Gwen said, you've got these large mining companies, large gold producers that are yielding 2%, which is well above the average S&P yield. That's value. They have no debt. I mean, it's not for nothing that Warren Buffett bought $500 million of Barrick Gold this year in July. I mean, he's been well known to have sort of disdain for gold, and yet his company bought that much of the largest producer. Why? Gold is at a high price. It's very profitable business for Barrick right now. The yield's attractive. And a little side note, Warren Buffett bought 3,500 tons of silver back in 1997 and made $100 million off of that. So he knows and he likes this space when he sees the right setup. And I believe he sees the right setup. If any, if that's going to attract generalist investors to this space. Right. And I think that's going to make them, really understand, your show is called Follow the Money.
Well, there you go. Follow the money.
Follow that money. And, if we look specifically or maybe a little bit more generally at precious metals, if you look at what some of the really big money is doing, what our central banks doing, they've been net buyers of gold for the last 10 years after flipping for decades from being net sellers. That's more following the money. That's big money. That's a lot of knowledgeable money. If they're doing it, there's a reason. I think that those are the kinds of things that people need to look at.
Okay. A question came in.
So why is Canada getting rid of gold?
Canada has an incredibly bad track record for buying and selling gold. Do not follow the money of the central bankers of Canada. Let's just clarify.
Always exceptions.
Really bad track record.
Sorry, John.
Oh, no, sorry. There were a couple comments or questions that came in from the live stream. Gwen, Greg was saying his favorite pick of yours is Brigadier Gold. And then he wanted to know, would you be interested to know I would be interested to know what Gwen thinks about the Eclipse Northern Vertex deal.
Yeah, I've had a long conversation with the Eclipse team since that deal was announced. I mean, such an interesting deal, right? Eclipse it's surprising, but not. And so it's not surprising if you sort of know Mike Allen, and who's the president there of Eclipse, and then know the money that's behind Eclipse. And that's sort of the Sandstorm Pathway Capital office. They are deal makers. I mean, they have built, Sandstorm is obviously the biggest example thereof, but they have built companies very successfully over the past decade. And so that platform really suggests that Eclipse was always meant to be bigger than the Hercules project. And I would say that the valuation that Eclipse has carried in the market to date means that a good chunk of the market understood that there was likely a deal coming somewhere. Then you look at Northern Vertex. Northern Vertex has been chronically underfunded for exploration. And so there's so many stories in our market of, mines that are working, the Moss mine is now making money. They had their struggles, but they're making money now and it's working. But if you look at their exploration news releases over the last year, you're like, what is going on here? There's some very interesting hits, but they seem very scattered. Like, I don't understand. And I've had exactly this conversation with several subscribers who've been like, what is going on with Northern Vertex? And it's been tough to understand. And really, it's just a story of not enough money and time to focus on exploration. So the Eclipse team is sort of the perfect team to come in. They've taken a look at that jurisdiction. They see a lot of opportunity to unlock new resources around the Moss mine. and then to have a platform that makes money to support whatever else they do. And what else they will do in the near term is try and create a much longer and more robust mine plan for the Moss mine that therefore creates a higher valuation on that asset, and put some money, continue to explore Hercules and see if the thesis there plays out. They remain optimistic on the Hercules asset as an exploration asset. And then I wouldn't be surprised if they continue making deals. I mean, Mike Allen is now no longer going to be the president. He doesn't have to spend his time doing interviews and shareholder questions like a president does. He can go and find deals, and that's what Mike Allen is really good at. He's a very strong geologist with a really entrepreneurial bent, so he can go out and keep focusing on that. So is it changing them? It's not a market moving event, oddly, because Eclipse had almost already priced in that there would be something happening of nebulous nature down the road. Is it a buy right now? Well, I think probably buying Northern Vertex at these prices, given the management and exploration expertise that's coming into the deal, probably makes good sense. So I like the deal. I don't think there's much to dislike about it.
I'm going to have to jump off this feed in about 2 minutes, but I just wanted to ask both of you, since we're in essentially the heart of tax loss selling, is there anything that you would put on our followers' radars for tax loss buying, shopping?
I'm literally picking up the piece of paper that's beside my computer right now, because that's what I'm looking at. So I can throw a few names out there. I think Van Gold is a pretty interesting story. I'm not going to go into the details of these stories, but I'm just going to name some stocks. So I think Van Gold is pretty interesting. I think that GR Silver is probably an interesting buy right now. I like a little company called Blue Lagoon. You've probably never heard of it, but it's a really interesting asset, company, new deal. And Benchmark. Those are the ones that I'm going to throw out there right now. Peter, do you have any? Sorry, I probably stole GR Silver from your list.
You certainly did. Yeah, other than that, I would say I like BlackRock. I like Silver Tiger. I like, let me see, there is Silver, Southern Silver. And yeah, I think, overall, again, these are, I won't go into details, but those are names that I'm looking at very closely, and that kind of makes sense to me as we move through the next sort of few weeks.
If BlackRock keeps hammering those results, you're going to be happy at Ely as well, Peter.
That's right, absolutely.
I'm going to jump off because I have a contractor here waiting for me. But I know Wes is going to put up a graphic where I'm going to leave, and you guys can continue on a little bit. But thank you very much for coming on, Peter and Gwen. Loved having you guys on, and I think everybody should check out the newsletter.
Thank you
so much, Karl. Okay.
Yeah, I won't yak at you too much longer. I did want to ask one question, though, and it kind of goes back to what we brought up earlier, and it's this whole, some of the effects of the stimulus has been this resurgence in the retail investor, and more retail investors, I think, especially in the US, with government stimulus money, opening Robinhood accounts, and the stories you hear, it's like going all in on Tesla and all in on call options on tech stock A, tech stock B. Do you think that when the commodity space really heats up and maybe starts to go parabolic, we're going to pull some of these investors in that maybe have never invested in commodities before, that don't really have any real knowledge of commodities? Do you think that this could sort of exacerbate some of the big moves that might happen, having some of this Robinhood money, for example, come in? What are your thoughts on that?
Yeah. Gwen, do you want me to go first?
Yeah, Peter's the one to answer this one.
Okay. Well, that's interesting, actually, because Robinhood is something I've looked at, to some extent over the last few months. I have noticed that there's a website, or there was a website called robintrack.net,
Yeah.
which kept track of the level of ownership of different stocks by Robinhood account holders. That's actually no longer, that feed is no longer available to robintrack.net for a bunch of reasons, and it may or may not come back, but it doesn't change the fact that the data is still available, at least up until I believe the beginning or middle of August. And I mean, I can speak at least to the precious metals, the bigger precious metals stocks. And it's very interesting if you look at what the ownership was like and what happened when, for example, gold and silver, took hits in March and then ran up to August and then dropped back down in August, started to correct a lot, most, if not all, of these gold and silver stocks and ETFs for bullion and so on. Interestingly enough, in some cases, the buying continued. The ownership of these assets continued to grow as the price dropped. And that really quite shocked me. It was not something I expected, especially from, millennials, essentially, because the average age of a Robinhood account holder is 34. So I think that's, more or less fair to say. But yeah, I mean, yes, to your point, yes, they're likely to have some effect. If you look at crypto, just to make a quick comparison, crypto the whole space is worth about 10 times what the investment in silver investment demand is, which is crazy. So if, people, you can easily imagine that some people are thinking, wow, like I've missed the boat on Bitcoin. And if that's what they think, I welcome them to look at silver and commodities, but silver in particular, because silver can be crazy volatile. It's shown itself to be that way. But silver itself, you can certainly do quite well, but then in silver stocks, and I'm not even talking about the highest risk silver stocks, I'm talking about some of the largest producers and even some of the royalty companies. In the last bull market, in the span of about 2 years, I'm going to say the largest silver company, let's leave it at that, was up 10 times in 2 years. So this is probably one of the lowest risk silver companies. So that kind of leverage is just tremendous. And you can, to some extent, say that's with relatively low risk, being the size of company that we're talking about. So yes, absolutely. I see that sector or that section or that portion of the investment world making its way over to commodities and certainly helping to push it, exacerbate it. Absolutely, yes, as well.
Okay, so Peter's saying silver stocks or Bitcoin part, take two.
Silver's the next Bitcoin.
All right. Well, we'll see if you're right. We've been live for about an hour, so maybe we'll cut it off here. I don't want to take too much of your time, but really great talking to you both, and I want to wish you the best of luck in your new newsletter. Again, for anyone watching, if I'm going to get it right, the website would be silverstockinvestor.com, correct?
Well, that one's not quite live yet because this is still a work in progress and we've got the pedal to the metal. But the easiest way to sign up, to get information, to subscribe is right now at the home base, which is resourcemaven.ca. That's my website. That's certainly live, and there's a clear Silver Stock Investor button there where you can sign up.
Okay. And because this is a new newsletter, I don't know if this is something you do. Do you ever do like a trial, like 1 month free type thing so people can see? Are you going to do a promotion like that?
Absolutely. Yeah, absolutely. For sure. There'll be trial offers. There'll be 1 month free. There'll be, all those sorts of offerings. We want to encourage as many people as possible to give this a try because we so believe in the silver opportunity and then the guidance that this letter will hopefully provide.
And Peter says it's going to be Bitcoin part 2. So there's lots of
and 3, maybe, and 4.
All right. Well, great to talk to you both. Nice to have you on the show, and stay safe, be well, and maybe we'll have you on another time to chat commodities. This was fun.
Likewise. Thanks so much, John.
Thanks, John. Pleasure.
Take care, Peter.
Cheers.